I want to bring on Yahoo Finance's Brian Cheung now for what we can expect for the Fed's last policy announcement of 2020. Hey, Brian.
Hey, Kristin. Well, the Federal Reserve, as you mentioned, with its last policy setting meeting of 2020 this Wednesday, will get a press conference from Jay Powell in addition to a statement, in addition to summary of economic projections from the central bank, obviously at this critical point where on one hand, you have COVID cases rising to new record levels seemingly by the week. But then on the other hand, you do have the upside risk of a vaccine with some of the first people in the United States being inoculated today. So the question is going to be, how will the Federal Reserve respond with interest rates already near zero? Well, one way it could do that is by using forward guidance. The Federal Reserve has committed to already purchasing about $120 billion in mortgage-backed securities in addition to U.S. Treasuries per month. But the Federal Reserve could add some language to its statement that says it could continue that pace of purchases at least until it realizes that the economy is back on track to reach its dual mandate goal of maximum employment in addition to stable prices. The Federal Reserve's balance sheet is already near $7 trillion. So any sort of update from the meeting this Wednesday could commit the Fed to keeping that balance sheet on a growth trajectory and not tapering it off until, again, the Fed reaches that dual mandate condition. So that's going to be very interesting as we do head into that press conference, which is scheduled for 2:30 on Wednesday. Kristin?
Brian, I want to ask you about a report that came out from the Fed, at least looking at consumer expectations going forward. We've been looking to the Fed a lot for what they're anticipating, at least in terms of the economic recovery and the economic pain that most Americans have been facing throughout this pandemic. What are they expecting, at least going forward, when it comes to spending?
Well, very interesting point coming from the New York Fed in a survey release this morning showing that in November, the expectations for median household spending a year from now is actually the highest it's ever been in about 40 years or so. So what the report says is that they expect spending to increase by 3.7% in the year ahead. A lot of that gains was attributed to actually households with incomes below 50,000. So it shows that those lower income households that have been most adversely impacted by this crisis are actually the ones that have the most optimism in being able to hopefully pick up income and then spend more in the next year. Now, that could be for a couple of different reasons. One, maybe the vaccine optimism over the next year, in addition to possible stimulus talks in DC as those discussions do continue about whether or not there could be some more support to those impacted households. Something very interesting to watch as we do, again, hit that critical inflection point with this stage of the COVID cases, but also on the vaccine development.
All right. Thanks so much to our Fed whisperer, and as he likes to describe himself, my best friend, Yahoo Finance's Brian Cheung. Thank you for all of those updates.